Good day, IITians. I am Katrin Daguman, and together with me are Khalid Datumanong, Francheska Fuentes, and Patolen. As an accountancy student, answering problems are quite nerve-wracking and complicated. In order to help lessen some worries, we, Group 6, are going to present and answer a problem about bank reconciliation. In this video, we are going to first present what the problem is, second is to present and tackle the solution, and third is to further explain the standards relevant to the subject matter. Before we indulge ourselves in the problem, let us first shortly define what bank reconciliation is. So, bank reconciliation is the process of comparing and matching the balances in an organization's accounting records for a cash account with the corresponding information on a bank statement. The goal of this process is to ensure that the records are accurate, identify any discrepancies, and make necessary adjustments. Remember, bank reconciliation is about comparing and matching balances. So now, we are going to proceed on answering a problem. The books of Manila Service Incorporation disclosed a cash balance of 687,570 pesos on December 31, 2021. The bank statement as of December 31 showed a balance of 547,800 pesos. Additional information that might be useful in reconciling the two balances follows. Check number 748 for 30,000 pesos was originally recorded on the books as 45,000 pesos. A customer's note dated September 25 was discounted on October 12. The note was dishonored on December 29 maturity date. The bank charged Manila's account for 142,650 pesos, including a protest fee of 2,650 pesos. The deposit of December 24 was recorded on the books as 28,950 pesos, but it was actually a deposit of 27,000 pesos. Outstanding checks totaled 98,850 pesos as of December 31. There were bank service charges for December of 2,100 pesos not yet recorded on the books. Manila's account had been charged on December 26 for a customer's NSF check for 12,960 pesos. Manila properly deposited 6,000 pesos on December 3 that was not recorded by the bank. Receipts of December 31 for 134,250 pesos were recorded by the bank on January 2. A bank memo stated that a customer's note for 45,000 pesos and interest of 1,650 pesos has been collected on December 27, and the bank charged a 360 pesos collection fee. Based on the above and the result of your audit, determine the adjusted cash and bank balance and net adjustment to cash as of December 31, 2021. Now, in explaining the elements needed to solve the problem and identifying the book and bank reconciling items, we have Mr. Khalid Datumanong.
Thank you so much, Ms. Daguman, for presenting the problem. Now, we move on to the presentation of the solution. But before we delve to the solution right away, I am going to discuss first the elements needed to solve the problem. Let this serve as a quick review to how we reconcile the balances of the bank and the book. So in reconciling those balances, we need to identify which are book reconciling items and which are bank reconciling items. First, we start with credit memos. These are book reconciling items because these are items that are credited by the bank but not recorded by the entity in their books. An example of this would be the proceeds of bank loan credited to the account of the depositor. Secondly, we have the debit memos. These are also book reconciling items since these are items debited by the bank but not recorded by the books. An example of this would be NSF checks, also known as no sufficient fund checks. These are checks deposited but returned by the bank because of insufficiency of fund. And then, the last book reconciling items would be errors. I will not delve deeper with this, but simply put, these are errors committed by the entity in the process of recording items in their books. Moving on, we have our bank reconciling items. Firstly, deposit and transit. These are collections by the entity but not yet reflected in the bank statement. Secondly, outstanding checks. These are checks written and recorded by the entity but not yet reflected in the bank statement. And last but not the least, we have errors. Again, simply put, these are mistakes committed by the bank in the process of recording items related to the depositor's account. Now that I've reviewed everybody with regards to the items needed in the reconciliation, we now move to the process itself. In this certain problem, we will use the adjusted balance method in reconciling the balances. In this method, we begin by plotting our unadjusted balances for both the book and the bank. Then, as we go on, we adjust those balances by adding or subtracting the necessary adjustments. Here we see the elements or items that I had discussed earlier. For the book balance, we have the unadjusted balance, then we add the credit memos, then we subtract the debit memos, then we also adjust the errors depending on its bearing. Moving on to the bank balance, we have the adjusted balance, then we add the deposits in transit, then we subtract the outstanding checks, and then we also adjust for the errors depending on its bearing.
Thank you, Khalid. Now we're going to show the bank reconciliation and show the solutions for each of the questions. First, we're going to solve and answer question number one, which is what is the adjusted cash in the bank balance? So we're going to use the adjusted balance method, which was shown by Khalid, our previous reporter. But before we can proceed with the solving part, we're first going to identify the reconciling items of the bank and the book. It is important to remember that when identifying the reconciling items, it's important to have a good analyzation skills because sometimes the transactions get very tricky and confusing. So first, let's begin with letter A. Check number 748 for 30,000 was originally recorded on the books as 45,000. In this alone, we can say that there is an error with recording by the book because check number 458 was originally for 45,000 but was improperly recorded on the books as 30,000. So there is an understatement of 15,000 pesos. So what are we going to do if it is understated? Then we add it. But we'll talk about the solving on the later part after this. So this is also a reconciling item of the book. Now let's move on to transaction letter B. A customer's note dated September 25 was discounted on October 12. The note was dishonored on December 29, which is the maturity date. The bank charged Manila's account for 142,650, including a protest fee of 2,650. Now, so it says here that there is a note, the note which was dishonored on December 29, which is the maturity date. We know that a dishonored note is a debit memo because the bank charged it on Manila's account but not yet recorded by the book. So this is a reconciling item of the book. So let's move on to transaction letter C. So here, the deposit of December 24 was recorded on the books as 28,950, but it was actually a deposit of 27,000. So this transaction shows an error by the book. There is an overstatement by 1,950 because the book recorded it as 28,950, but it was actually only 27,000 pesos. So if there is an overstatement, then we deduct it. So this is also a reconciling item of the book. So letter D, outstanding checks totaled 998,850 as of December 31. So this transaction is an outstanding check, which is a reconciling item of the bank.
Now, letter E. There was a bank service charges for December of 2,100 not yet recorded on the books. So bank service charges not yet recorded by the book. So this is a reconciling item of the book known as a debit memo. So if there is a debit memo, then we deduct it. So let's move on to letter F. Manila's account had been charged on December 26 for a customer's NSF check for 12,960. So this is also a reconciling item of the book because it is an NSF check, which is not sufficient fund check, which is a debit memo. Now let's move on to letter transaction G. Manila properly deposited 6,000 on December 3 that was not recorded by the bank. So this is also an error by the bank because they did not recorded the deposit. So we are going to add this to the bank, and this is our reconciling item of the bank. Now let's move on to transaction H. Receipts of December 31 for 134,250 were recorded by the bank on January 2. So this is a deposit in transit because it was supposedly to be recorded on December 31, but they recorded it on the January 2. So this was still in transit during that time. So it is a reconciling item of the bank. Now lastly, we have transaction letter I. A bank memo stated that a customer's note for 45,000 pesos and interest of 1,650 has been collected on December 27 and the bank charged a 360 collection fee. So there is actually two things going on here, which is the bank collected a customer's note for 45,000 pesos and interest of 1,650 pesos with a total of 46,650 pesos, which is a credit memo. Also, the bank charged a 360 collection fee, which is a debit memo. Both are reconciling items of the book. Now we're done with identifying the reconciling items. Let's move on to the exciting part, which is the solving. Now I'm going to show you our solution for our bank reconciliation. We'll begin first with our bank. We know that its pro forma reconciliation is an adjusted balance per bank, add deposit in transit, and less outstanding check, and then add or less bank error. Now here we have our unadjusted balance per bank, which is 547,800. So we know that we have a deposit in transit, which is 134,250. Then we have to add those two, which results to a total of 682,050 pesos. And then, so this total balance will be deducted by our outstanding check, which is 98,850. So deducting these two, we have a we also have to add our bank error, which was what I mentioned earlier, which is a deposit that was not recorded by the bank, which is 6,000 pesos. Now we have to compute these three, which is the 682,050, and then deducted by 98,850 plus 6,000. Then we have a adjusted bank balance as of December 31, 2021 of 582,200 plus. That's for our bank. Now let's move on with I'm going to show you our book reconciliation. So this is our book reconciliation, which is we know that we perform a reconciliation of unadjusted balance per book, add credit memo, and then less debit memo, and then add or less book error. Now we have a unadjusted book balance, which is 687,517. Now we also have a credit memo, which is a customer note collected by the bank, which totals 46,600. So we add these two, we have a total of 734,220. Now we also have a of debit memo. We'll first have the dishonored note, which is 142,650, and an NSF check of 12,960, a bank charge, which is the collection fee of 360, and a service charge of 2,100. So all these debit memo totals 158,070. So, but other than that, we also have a book error, two book errors, which is we have to add a book error of check number 748, which is 15,000. And another book error, which we have to deduct because because it is overstated. And the first error, which is we have to add because it is understated. So this we have to deduct the book error because 1,950, which was improperly recorded. Now, so we have to sum it up, and then which is 734,220 deducted by our debit memo, which is 158,070, added by our book error, check number 748, 15,000, and less by another book error, which was improperly recorded, 1,950, and this totals to our adjusted book balance as of December 31, 2021, which is 589,200. So as we can see here, shows here that the balance of bank and the book it is balanced. So it is the same. So if both are the same, then we can say that they match and it is correct. So now the bank and the book has been reconciled. So that was our solution for our bank reconciliation. Now, let's go back to our question for number one, which is what is our adjusted cash in bank balance? Now that we have the answer, so we know that it is letter D, which is 589,200. Now let's move on to our solution for our question number two. So the question number two is much easier because we have already solved our question number one, so this makes our solution number two easier. So it shows here that we're just going to deduct our unadjusted balance per book and our adjusted balance per book as of December 31, 2021. So we have our unadjusted balance per book, which is 687,570, deducted by our new adjusted balance per book, which is 589,200. So this is our net adjustment to cash as of December 31, 2021, which is 98,370 pesos. So when we go back to our question number two, we have our answer, which is the net adjustment to our cash as of December 2021 is letter A, which is 98,370. So that's all for our presentation of our solution. Now I'm going to pass the report to our next reporter, which is Francheska, for our presentation of the related standards.
Thank you for that. Now let's move on to the relevant standards relating to bank reconciliation. So, bank reconciliation involves ensuring that a company's financial records or books match its bank statement. Several accounting standards are relevant to this process, ensuring accuracy and integrity in financial reporting. Here are the key standards that conform to and are relevant to bank reconciliation. The first one would be the IFRS 9 or PFRS 9, or what we call financial instruments. This standard governs the recognition, classification, measurement, and impairment of financial assets and liabilities. Bank accounts fall under this category, and accurate reconciliation ensures that the bank balances and transactions are properly accounted for. The second standard would be the IAS 1 or PAS 1, which is the presentation of financial statements. This standard requires entities to present a true and fair view of their financial position and performance. Accurate bank reconciliation ensures that cash and cash equivalents reported in the balance sheets are correct, reflecting the actual financial position. Now, for the third standard, we have IAS 7 or PAS 7, which is the Statement of Cash Flows. So this standard deals with the presentation of cash flows from operating, investing, and financing activities. Accurate bank reconciliations are essential for determining the correct cash flow figures, ensuring the cash flow statement is accurate and complete. Now for the fourth standard, we have IAS 2 or PAS 2, which is inventories. Although this standard primarily deals with inventory accounting, or accurate bank reconciliations ensure that the cash flow related to inventory purchases and sales are correctly recorded, impacting the overall financial position. Now, for the fifth accounting standard, we have IAS 8 or PAS 8, or what we call accounting policies, changes in accounting estimates and errors. This standard outlines the requirements for correcting errors and changing accounting policies. Bank reconciliation help identify discrepancies and errors in financial records, facilitating their correction and ensuring compliance to this standard. Now, for the sixth standard, we have IFRS 16 or PFRS 16, which is leases. This standard deals with accounting for leases. Bank reconciliation may include verifying payments related to lease agreements, ensuring these transactions are recorded accurately in compliance with this standard. Now, for the last standard, which is IAS 10 or PAS 10, which are events after the reporting period. This standard requires consideration of events occurring after the reporting period. Bank reconciliation help identify significant post-period end transactions or adjustments that may need to be disclosed or accounted for. So, in summary, these standards collectively ensure that financial records, including bank balances and transactions, are accurately and fairly presented. Bank reconciliation play a critical role in aligning a company's internal records with external bank statements, thereby supporting compliance with these relevant accounting standards. So now, to further understand, let's discuss the purpose of bank reconciliation. First is to ensure the reliability of financial records related to bank transactions. Second is to verify the accuracy of the ledger balance by making necessary correcting entries. Third is to confirm that the ledger balance is correctly reconciled with the bank statement balance. Fourth is to support the preparation of final account that fairly present the financial position and the performance of the entity. So overall, the purpose of a bank reconciliation is to ensure the reliability of records related to bank transactions. This involves more than just arithmetic accuracy. It requires correcting any discrepancies in the ledger so that the ledger balance is correctly matches the bank statement balance. thus making it such an important process. So, this is Group 6 and I hope you learned from this video. Until next time, Black One,